Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Copper Giant, a company advancing high-quality copper projects with a focus on the Mocoa copper-molybdenum deposit in southern Colombia. It's Ian Harris. Great to have you on the program.
Yeah, it's kind of exciting, exciting times and exciting to be a newbie on your program. So, lots to talk about.
Absolutely. And the copper space is in exciting times at present. I want to kick things off with your overview of the copper sector. What are the main themes and trends you're watching that you think more investors should be paying attention to in this space?
It's an interesting question, right? First of all, I hope there's a whole lot of new people that are actually coming onto your show and looking for new information because of all the excitement that we've seen finally in the commodity space and the mining commodity space. And really, we really need to divide it into two sections. One is the commodity copper, and the other is the equities. Right, whether it's a copper mining company or an exploration company such as Copper Giant, and so really the excitement recently has been gold and then recently silver, where we finally saw that big disconnect between commodity price and equities prices all of a sudden start catching up. People, follow the money kind of is the story in the equity space. And so as people are moving out, they're looking for the next best thing, and shining very strongly is gold and silver. For slightly different reasons, although silver might be a quasi between the two worlds of between a precious metal and an industrial metal, where copper is an industrial metal. But overall, the same thesis behind what's made gold and silver so explosive is even more compelling in copper. Right, the narrative has been there for such a long, long time, and something, if anybody recognizes me, something I talk about even more compelling now that we enter into the whole concept of data centers and AI in the part of copper, not for its gigantic usage, but because it's a life and death race, right? And I use that word, quite strongly, but I do think that Meta and Google, Alphabet, and others, see it as it's life or death who wins this race, right? Whoever can get in the best infrastructure, get ahead. They even calling it an AI bubble, but they're not slowing down any of their programs, right? They know that they have to put this investment in because it's a race. And so because that requires copper, it means you can't slow it down because you don't have enough copper. So sorry, that was fairly long-winded. But if we look at what we've seen already in gold and silver, I think it's going to play out in copper because the narrative is already there. So if we look at commodity price, it always seems to be a battle between a short-term focus and a long-term focus on where the price comes out. And when we go through uncertainty, the vision gets shorter term, which actually seems to happen because what's going on, and there's a lot of volatility. I've never seen so much volatility in the copper space that we've seen recently, because you have such a strong long-term narrative of the requirement, but then there's all these things going up, new tariffs, and all, geopolitically on the planet, what's going to happen to the world economies. They call copper Dr. Copper for a reason, right? That you see this up and down pull. And then a third thing is we saw when Trump first called for his tariffs on copper, it spiked on the COMEX, right? So, but what most of us, when we're looking at our iPhone, we see the COMEX future price, and that's what we see. So we saw this gigantic spike in price, but it was arbitrary because it was really the difference between an LME price and a COMEX price, with a factor of it's worth more in the United States because anytime soon it could be hit with 50% 50% tariff. Which then, if you also look at the line, there's a gigantic drop in copper price. Was the day that Trump said, "Oh yeah, but it doesn't apply to refined copper," and so it collapsed that day. But if you look at the LME price, we're at almost once again historical copper price. And you go, well, what's going on? People are concerned. What's going on with debt and the world economies? Is China, what's going on in China? Man, it feels awful in the United States right now. What's going on? Why is copper still at, historically high prices? Because it is still a short-term focus when you look at the commodity price. And it's fairly simple. It was already a tight market for years and years and years. They're saying that there's not enough new supply. And there's a fear that we're not have enough copper at the same time. So you're getting that long term is getting shorter term. So there's this pull between a short term and this now a medium term focus of concern. And so then you have problems like Grasberg all of a sudden, which I think is 3 or 4 or 5% of the world production now offline due to a deadly tragedy that happened at that project. You have Cobre Panama that was taken offline over a year ago. That is also a big percentage. And we were already tight. And then the worst is, okay, don't worry, we'll just get up. Well, when we'll figure it out later, copper price will go up and all of a sudden we'll turn on all this new production and it's not there, right? So all these factors are playing out. And so that is what then translates to getting the attention. There's more market attention now in the mining equities. And I think that, it's starting to spill over into copper, which has such a strong narrative, right? And it's not a narrative where people think it will do well for a year. It's going to do well for 10 years, right? It is. It's so when that motion starts, it's really going to take off.
Great summary. I want to pick your brain on the current supply-demand dynamics for copper. It's tough to wrap your head around because there's so many different uses for copper and there's so many different drivers on the demand side at present. You mentioned electrification, the AI data center build-outs potentially. There's the story of an emerging middle class and developing economies that is going to want air conditioning, computers, and all of the luxuries that we enjoy in the West, which also takes a lot of copper. So it's tough. I often think about copper versus uranium. Uranium is a very simple on the demand side. It's simply a fuel used in nuclear reactors. So if you can model out how many reactors are presently operating, how long their life is going to be, how many more are going to be built, extensions, et cetera, you can kind of come to a reasonable estimation. But copper is so complex in comparison. So how do you wrap your head around the supply-demand dynamics and just your thoughts on the numbers of how much copper you think is going to be needed moving forward?
First, we have to understand why, right? So copper is the second best metal at transmitting electricity, but pretty efficient, extremely efficient, right? The number one metal is silver, right? So when you're willing to pay for silver in your wires that go around your house, then copper's pretty safe, right? The third best, and I'm not even sure if it's third, but I'm pretty sure, but it's aluminum. But it's a big jump, just say, I'm making up numbers, but I know I'm not far off. Silver is 99.7 and copper is 99.3. And then, alumina is 93%. And trust me, don't look those up and say Ian's wrong. I looked it up on Wikipedia. He's wrong, but it's a pretty big difference when you get to aluminum. And so inefficiency means heat, right? So that's why you would never want aluminum wires in your house, right? Because eventually your house might burn down, right? So, okay. So, but it also gives you a broad range and understanding where prices could go. But right now, if it transmits electricity, right, and especially at lower voltages, it's copper, right? Unless you need the highest level of efficiency and some other reasons, corrosion, et cetera, and you're already willing to pay today, $48 per ounce versus $5 per pound, right? You're going to use copper. It is what transmits the electricity of the world. So if you look at overall demand, it's directly related to electricity. And still, I think 95% of all copper in the world is still used in electrification. But those numbers are expected to shift. At the beginning, and something that I didn't feel as strong about was the energy transition, And so when you hear energy transition, it's pretty simple. You have a car that's going to, and instead of putting gasoline into it, you're going to put electricity into it. So starting off, and all the electric motors of that car, an electric car uses 4 times more copper because every single one of those electric motors. I don't know if everybody's seen the inside of an electric motor, but it's just copper wrapped around in these motors. So that's part. But then number two is, you now, instead of using gasoline, you now need more electricity. Okay. So that more electricity is required instead of using gasoline. Okay. More electricity means also more copper. And then the third is, well, we also want to generate that electricity from solar and some all these other sustainable methods, which if you look at wind power or solar power, because it's decentralized, also uses more copper. So all this new demand is coming up. But I kind of had you look at the numbers, you're like, it's impossible. There's not enough copper. And so politicians go, we're going to say this and we're going to do that and we're going to go rah, rah, rah. And then you look and it's by 2020, 35, we're going to get rid of it. We're going to be net zero. And then it's 2040 and then it's 2050, et cetera. Because if there's not enough supply, you just slow down the numbers, right? I do believe we are going to get there. I do think it's kind of inevitable that we are going to be moving towards economies that are more based on electricity, right? But I think the new one that is the new insatiable demand is AI. And today or data centers, right? So not because it's a huge number right now, but it's a number that every time that they do an estimate, it's going to go up, right? Because if Meta did it in 6 months, we're going to do it in 5 months. In 5 months, I'm going to do it in 4 months. It's because it's a race. And really, it's even a race between the United States, China, and other world economies. And they're going to be competing for things such as India that's electrifying at the same time. I don't know if everybody remembers the last time, I think it was around 2005, 6, 7 time period where copper price took a shot through the roof. And that was just because the population of China was going from poverty to middle class and they were electrifying the entire planet. So just one country, although I bet, probably a quarter of the world's population was going from poverty to middle class. And that's now happening in India, right? At the same time, you have this new demand. So you have this, and then I go back to data centers and AI because they don't care what price tag. They don't care about price, right? It's just about winning, right? And they saw it once. They said, we saw what happened to Walmart when they didn't go to the internet, right? And now we have Amazon, right? So they're like, we're not going to lose this race. Whoever has the smartest computers, the best information, the more data, right, is going to win. Right. And again, it's between companies and it's between countries. Right. So that bodes well. Okay, that's the demand side. And then you look at the supply side. And I don't know if you guys have looked at all the curves, but a guy who's worked since, I graduated university in 97 and went directly to work in our Sarco's management training program and went out to Arizona and worked at the Ray mine and remember the prices of copper. And I remember the revolution during that time was you could leach oxides, and it was all this new copper came, and copper went down to 59 cents because all this new copper oxides were easy to then recover. But it was like a big blah of copper that hit the market. But since then, companies have said, man, it's really, really expensive to build a new mine. It's really expensive. And by the way, it gets me fired when it doesn't go right. When I said 4 billion, it goes to 8 billion, I got fired. Or when I do Pascalama and it gets canceled after we spent billions of dollars on it, I get fired. I don't want to get fired, right? I mean, people who remember the last cycle after the last bull and there was kind of the super cycle came off, right? There was like 15 of the top 20 CEOs of mining companies all got fired. Like, you did growth at all price, et cetera. I mean, the same shareholders were telling them to do it. Like, well, how are you going to grow? We need to grow. But when things came off, they're like, you didn't focus on cost. You didn't, and whoosh, like heads rolled. So people don't want to get fired again. And so they're like, no, we're just going to do brownfields expansions. And if you look at the curves, the average grade of copper continues to go down and down and down and down and down. And the projects are older and older. I think at one time, 35% of all the biggest 20 biggest copper mines in the world started over 100 years ago, right? So they're just inking out a little bit more and a little bit more and a little bit more. But as these, if you've ever seen these pits, every time they do a pushback, every time they get bigger, right? It's just more and more and more material that they have to move to get less and less and less return. So they're getting more and more marginal. So over the last 10 years, there's only really been 5 or 6 decently sized, large sized copper mines built. There's been very, very few built, and even worse, there's been a lot less discovered. So that's what I talk about, how this is going to play out when the world wakes up and the guys who are currently in control of the commodity price are very short term thinkers. The problem is to bring in new supply, these timelines can take 10 to 15, 20 years. So a listener, why should they care? It's going to get a lot of fun in the equity side in the copper equity space, right? There's real opportunities. The people that said, oh man, I just looked at the charts and all these gold companies are up 200, 300% this year, right? Like I missed out, man. First of all, I think it's just the start of a secular bull that normally lasts at least 10 years. So don't worry about it. We're still in just the little green shoots that are coming out. But I think that same opportunity is coming really quick on the copper side.
Well, that's a great moment to segue into discussing how Copper Giant fits into the picture. Could you start by giving us an overview of the company?
So first is everybody has their niche, right? And then if you're learning, there's green fields exploration. It's just, I don't want to call it moose pasture, but you got some indications and there's like, okay, we're going to and we want to drill this thing and we're going for a discovery, right? And if everybody's ever seen the Lassonde curve, it's actually very exciting, right? Because you can go from here and then hit a nice hole and you go boom, and it looks like a hockey stick when some of the great discoveries are made in a strong market, which it feels like we're coming into, right? But post-discovery, normally post-resource, when a first resource comes out, it's like into a project development stage where you say, okay, how are we actually going to mine this thing? And so I'm a mining engineer. And I try to, hopefully nobody's got out their calculator when I graduated in 97. And then I went to South America for the first time in 1999. But I've been a part of building projects, right? Including Corriente, which was Mirador, which is now growing to 150,000 tons per day. It's going to be one of the biggest copper projects in the world. First industrial scale mine in the history of Ecuador came online, and then came Fruta del Norte. Many people might be familiar with that project. But I like being part of projects that get from where it is towards being able to produce. And so that's what we look for. We look for what the bigger size companies on the world, what are projects that really get built? Now, I'm not saying smaller projects won't get built, but I don't think it's going to be the same as BHP doesn't want to build small projects. They don't want to build 500 small projects. They want to build 1 or 2 big projects. And so that number for me, by the way, is about the ability to show a project that could be 2 billion tons at about 0.5% copper equivalent, which means about 10 million tons of contained copper. To put it into perspective, world production of copper today is about 20 million tons, with an expectation of continuing to grow. Like I think Friedland says, we need to mine more copper in the next 30 years than we've mined in the entire history of mankind, right? To put it in perspective, right? It's a lot of copper. And it's not a huge numbers. It's like 4, 5, 6% annual growth rates. It's not, but it's still much higher than the 2% we've seen, which is normal. So Copper Giant focuses on projects that can have that potential size and scale that become national level interest, biggest mining company interest, the type that only 6 get built every 10 years. And I'm joined by another guy who was a part of one of those remember I named, there's about 6 projects that were built over the last 10 years. He was the CEO of Cobre Panama when it was with Inmet, and he got it the same thing. He got it all into piece, got all the permits into place, got the social license, got everything. First Quantum bought it and then built it, right? In my case, I got a little bit further, started the construction, but it was also sold before that for $690 million, and then ended up getting built in the end by Tongling and CRCC, 2 Chinese SOEs. So that's what we like. And so I think market gets it wrong a lot of times on understanding which projects are going to get built. But we started Mocoa, which is our main flagship project in Colombia, because it's in the same Jurassic belt that Mirador was in. So it's geology that I understand, it's areas I understand. I said I've been working in South America since 1999. I live in Colombia. I think it's important to live in Colombia in order to guide these types of projects through what it's required to get built. But that's Copper Giant. Copper Giant is about getting the right projects, putting all the pieces into place, having that strategy of how these projects can become the next when the world needs it. It needs all this copper. Be ready to supply the world in that window that opens up and says, we need more projects, more copper production, and we will be ready.
Well, let's shift to discussing the team behind Copper Giant and how you plan to leverage their expertise. And let's start with yourself and how you came to become CEO of the company.
Well, I won't go into the nitty gritty. Well, I came from Mirador, so I was in the Jurassic Belt. Mocoa was in the Jurassic Belt, and I was like, here's my chance to take everything that I learned at Mirador and do it again, right? But at the time, and maybe people don't know this, at the time when I joined in 2021, Mocoa was a project no one thought you could drill. They said there's too many problems, there's community issues, the location, blah, blah, blah. And I went and visited and I said, we can do this. We absolutely need it, but we need a little bit of time, right? So we actually had some additional projects, but the major focus was still Mocoa, working in the background, crawling away on getting it on how to get it drill ready, right? So it's disappointing when we finally got it all done. The market still was a little soft and didn't appreciate what had been done, but it was huge that we have the ability now. We've been drilling on this project now for over a year straight, right, without any issues, and people recognizing where this project was. I think a lot of people knew it was a quality project, but thought, no, it's going to be too hard. But and so I'm a mining engineer by background. And so if you look at my board, another key person I already mentioned is Ernie Mast, because he is actually a metallurgist, and a master's, I think, in maybe in mining. But anyways, his main focus is metallurgy, which is and then also Mark Gibson has recently joined, who is a world-renowned geologist, came from Cordoba Minerals, was COO of Cordoba Minerals, and was CEO for a time of Ivanhoe Electric, world-renowned geophysicist. Also, by the way, Cordoba Minerals was also in Colombia. It's a smaller project compared to Mocoa, but it's advancing towards construction. So he has successfully helped manage that once before. And so really proud of bringing him on board. It's kind of, on a board level, we also have Rob, who is the VPX of Dolly Varden. So we also have the geology side, additional help on geology, but we're very focused on keeping people that know how to get projects actually built, right? That's the kind of the main focus there. And we have some key advisors too that have also helped manage projects through those, and keep that focus, because it's easier to talk to people that say, hey, Ian, are you thinking about what's coming up 3 years, and having a long-term focus than just, what pickup trucks are you buying this year, right? So a really strong board has been important. I would also say the project is now in the Fiore group, which is Frank Giustra's group of companies. He is the biggest sponsor of the company, biggest shareholder of the company, Frank Giustra. And I like to say, I build projects, he builds companies, right? So he is been amazing the way that he focuses on, we want to do this on a bigger scale. Mocoa is the start of a bigger vision. On the ground, my right hand is Diana Alvarez. She's our VP of Corporate Relations and country manager. For the second year in a row, she's been named one of the most influential women in Colombia. So it might be missed in market, but it's not missed in Colombia, the reputation that's been built around the company for the second year in a row. And again, too, we've been ranked in the top 15, I think it is, of most highly reputation companies in Colombia. And we are The only other non-producer on that list is AngloGold Ashanti, which is worth several billion dollars, more than a handful of billions of dollars. So we're very proud of the reputation that we've established in the country. That's Edwin Naranjo is our VP of exploration. He at the time was one of the few QP geologists in Colombia. And is working now on his PhD. He did a lot of the work, especially on the age. I'd like to go a little bit into it, even though I'm not a geologist. Talk about the age of the time of fertility that the project has had, and proves that it could be much bigger than it we're currently looking at. And so that's kind of you could see that we have thought from the beginning on how to build a strong company that can actually develop projects that can be built.
Fantastic. I want to touch on a news release you put out last week. You announced assay results at Mocoa. Here's a quote from the press release. This new intercept not only strengthens the geometry of the high-grade domain, but also demonstrates that strong copper-molybdenum mineralization extends into areas previously considered lower grade. This follows on other drill results and metallurgical test work you've released over the past few months. Could you maybe bring it all together for us and walk us through the details and the impact they have on the project moving forward?
We put out a set of interesting news that hits on all the areas that I think are important on advancing a project, right? You mentioned specifically strong geological results. This is an 800-meter hole that started from surface that averaged 0.5% copper equivalent from the surface. And so another thing that I would like to communicate is being near to surface versus 1,000 meters underground is a big difference, right? In terms of the cost it costs to actually mine it and the capital it takes to get to it, right? So if you want, a great example is Resolution that has been recently, getting a lot of push. It's actually one of the biggest deposits in the world, Resolution. And it's in the United States with only one problem. If you started building towards it today, it would take at least 7 years before you have a pound of copper coming out of that project, right? Because it is so deep underground. It would take you that long to get there and put in all the infrastructure. So that's a big part of Mocoa, in addition to access to infrastructure that we could hopefully get some time to spend on that. So amazing drill hole results. And I don't know if people see it at Best Copper Weekly drill hole results. You're always seeing Copper Giant in that list. It's one hole after the other that demonstrates a significant amount of copper mineralization. The other was the metallurgical test work, which technically is important. One is what's the grade in the ground. The second part is how much do you get out when you actually mine it. Right. So, and a big one for us was moly, which we've been assuming in most of our resource calculations and our equivalent calculations at 75% recovery is coming out consistently over 95% recovery, which I suspected. I could pull you a piece of core off my desk. Actually, maybe I can. Yeah.
Nice.
But the moly has always been very blebby. It's normally copper moly deposits. It's very disseminated. You can barely see it. But if you look at this rock, see that silvery color right there? That's molybdenum.
Yeah.
Molybdenite, actually. And so if you could see it like this, then a high chance that we should be able to not have a problem separating it because it's not like entrapped inside of other mineralization. So that was huge because that will make a big difference on the economics on the project. The other is that we said that we had finished our prior consultation with Condagua, which, very early for us. We're actually the first project ever to do it in an exploration phase in Colombia, which is big. And the number two that, not confirmed, but I'm pretty sure it's the first time the government had ever seen a company do it face to face, where we did it and Condagua also represented themselves. There wasn't, consultants or experts or somebody else doing this consultation process for us. We did it ourselves because we saw it as a long-term agreement, a long-term relationship that we're creating over time. And so these things we put a high value on, an extremely high value on, even though market doesn't always see it, because we know we're playing a long-term game of taking a project today that may be worth $30 million in market. But by the time, I believe Copper Giant will be a multi-billion-dollar company. I believe that, right? Because I can see how this project could grow in terms of where market will be going, but also the valuation that this project will be worth. And my own experience of Mirador 10 years ago selling for $690 million. So I can get an idea of where this project can go. And the last one is we announced on October 22nd, Wednesday, that we're moving forward with an updated resource estimate. So all these things are in the place to say this project is advancing towards a bigger picture, right? So a lot of good news come out of Copper Giant recently.
Well, you mentioned infrastructure at the project. Walk us through that, the infrastructure you have in place.
So if I try to simplify things, if you have a mine and I have a mine, more or less, it's going to cost the same to mine that rock, right? Well, a big difference between near surface and deep underground. But if we relatively have a similar geometry, right? Yeah, there's some fuel, is electricity, labor. There's some ups and downs, but they're not three times more expensive, right? So you could also assume it costs about the same to build, right? The number of trucks you need, the size of the mill you need, that's not a huge. Yours might be 30% more expensive than mine, but it's not going to be three times more expensive. The big difference in projects, and you see billion-dollar numbers a lot of times on these size projects, is because they're so big, they need a massive amount of infrastructure. And what really costs money for a big copper mine are power lines, water, and ports, right? And roads, and roads, right? So yeah, your project costs $1 billion. Mine costs $5 billion because I also have to put in roads and power lines and ports and I'm desalinization plants to bring the water from the ocean up to the 5,000 meters. There's some craziness, right? So the real big difference in CapEx, and remember, IRR is the return on the capital you've employed onto a project. So economics are directly related to grade, which is revenue, versus CapEx. So CapEx is huge. And so the Mocoa project, not only is it near surface, which makes it easier to access, right? It's also in an area where nobody lives, which is also huge. Second is it's only 10 kilometers from Mocoa, which is about 50,000 people. So it's not a camp job, right? People are just going to be going home every single day after work. But right next to the project, about actually it's only 5 kilometers away from the deposit area, is the interconnection between Ecuador and Colombia. So you have two 220 kVA power lines that go right by the project. Those are the biggest of the big. To put it in comparison, Mirador required a 110 kVA power line. We have two 220 kVA power lines. We're 10 kilometers away from the national road system. And on top of it, 400 kilometers away from an open port that already has bulk shipping, right? And to put it in comparison, Mirador in Ecuador, the project I was involved in, I think was the lowest cost greenfields copper project per pound of copper. How much did it cost to build in the world, right, at the time, or the recent history? Not in the world, but in the last 10 years, sorry. We still needed to put in that transmission line. We even had a power project that they're still considering that they're going to have to build a run of river hydroelectric. We had to put in like 14 bridges plus a 120-meter bridge. And we at least had to do the storage of the warehouse at the port, right? So Mocoa looks really, really good. And I should also add that we're only 45 to get to the project. It's about 30 to 45 minutes from a regional airport, right? So it's got so much going for it. I use a word when I talk about Mocoa. It's inevitable, right? This project will be an important copper project because it's got so many things going for it.
Well, I'd like to end by opening the floor to you. Is there anything we haven't yet discussed on Copper Giant, or anything you think it's important to emphasize to potential shareholders of the company?
I think the biggest one, it might be on the mind of, because you see Trump and Petro fighting, right? Which becomes very interesting. And everybody asks me, I was like, it's so bullish. It's so bullish. And you go, wow, how could that possibly be bullish? Trump is fighting with Petro, saying tariffs on Colombia, and it's going to cut off aid to Colombia. And I said, well, elections are in May, are coming up in Colombia. And what it's saying is something that I've been saying for the longest of time. The battle of the planet right now is over critical metals. The most critical of the critical metals is copper. right? Now, the rare earths might be of the day because it's much smaller, but it's more critical because, you have zero, right? But copper is what builds nations, right? Copper is the new oil. And remember what we do over oil. Right. And so we're moving towards copper as the new oil. What does that mean? So you see what's going on in Venezuela with oil, but now you see there's some, in the way I interpret it, right, is saying I'm putting some pressure onto Colombia, right? Because if I need to friend shore, right, near shore, whatever it's called, my future production chains, Colombia should be, it's a major non-NATO ally of the United States. It's the same ally level as Japan and Australia, right? So you see this exertion to say, I want to make sure a little longer time vision, right? Come back to nest, right? And those who do not are going to, be punished, right? It's a terrible way of looking at it, but it's what's playing out, right? I think that what I've been saying for the longest time is coming, really has been important in where copper is going, right? Copper is the most critical metal in the advancement of world economies. The globalization of copper is breaking down. We allowed China to become the 60% producer of all copper in the world, and we're going, that was not the best strategy. So you're seeing a breakup of the world's globalization, which means securing supply chains. It means a less efficient system, but that means that the start of those systems are the raw materials. And so what increases most in value in this overall globalization breakup is the underlying assets. And so another reason why I'm extremely bullish for so many reasons that I can just see this way of we can increase our value. I think we've seen about a 50% increase in our valuation over the last month. It's been choppy recently, but we're now seeing where people are starting to understand where copper is going and where Copper Giant is going.
Excellent. I'm going to put a link in the description below to the Copper Giant website, as well as social media, so people can follow along with the company. Ian, thank you so much for coming on. It's been a blast.
I hope it's not the last time. I enjoyed it a lot too. Thank you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.